And so it's time to do business again here on Business Incorporated. We do 55 minutes of a journey around the world of business. And here's what we have prepared for you today. It's day 2 of the International Debt Management Conference that's holding in Switzerland. Suez Canal is losing revenue because of the Houthis' attacks. Now it's down to $800 million. And Sudan has banned imports, all imports from Kenya, especially their tea. Good afternoon, everyone. Welcome to Business Incorporated. I'm Ini John Mekwa. Let's do business. Starting from the global space, oil prices rose more than 1% on Tuesday to their highest level since the beginning of the month, supported by instability in the Middle East and China's plans for more economic stimulus. Look at the numbers for this afternoon. 84 cents is what Brent has gained at this time, and that's about 1.2% to $71.91 a barrel. WTI has also gained the same percentage and is at $68.42 a barrel. Now, for both, we've seen great movement and gained support from President Donald Trump's vow to continue the U.S. assault on Yemen's Houthis unless they end their attacks on ships in the Red Sea. Trump has said that he would hold Iran responsible for any attacks carried out by the Houthi group that it backs in Yemen. Meanwhile, Israeli airstrikes in Gaza killed at least 200 people. Palestinians' health authorities disclosed this. And attacks on Tuesday ended a weeks-long standoff over the extending ceasefire that halted fighting in January, along with U.S. strikes on the Houthis in Yemen. Several factors provided support for the market. Also, China unveiled plans to revive consumption, while Chinese retail sales and fixed asset investment growth came in stronger than expected. The State Council, that's the Cabinet, they unveiled a special action plan to boost domestic consumption over the weekend with measures such as increasing incomes and offering child care subsidies. Still in the global space now, but we head to the metals where gold prices scaled a record peak above the crucial $3,000 mark on Tuesday, first for the second time. The first one was on Friday as investors seek to cover for economic concerns fueled by U.S. President Donald Trump's tariff policies. Look at the numbers at this time. Isn't it great to just see above $3,000 for gold, up 0.2%, $3,008.08 per ounce. U.S. gold is also up 0.4%. $3,017.60. Spot silver is also up $33.89. Platinum up 0.5%, over $1,000, and palladium is also up. So I guess investors in the metals at this time will be smiling to the bank. Historically, this is considered a hedge against geopolitical instability, and gold has risen more than 14% so far this year, and we're just in the first quarter since Trump took office in January. Gold has hit a record high 14 times as trade tensions have boosted safe haven demand. Mr. Trump has floated plans for a series of U.S. tariffs from a flat of 25% on steel and aluminum, which came into effect in February, and reciprocal and sectoral tariffs that we expect will soon be imposed. And gold is moving higher on account of a weakened dollar and continued tariff uncertainties. Well, still in the world space now, but not in the market. It's day 2 of the International Debt Management Conference holding in Geneva, Switzerland. The UN Trade and Development, that's UNCTAD, has been speaking on the importance of the meeting since it found that over the past 6 years, more than 2/3 of the world's developing countries have experienced deterioration in their external debt sustainability. They note that in 2023, the average developing country was spending 16% of their export earnings to service their debts. more than 3 times the 5% limit set for Germany's post-war reconstruction under the 1953 London Agreement. UNCTAD observes that almost 2/3 of developing countries' debt is now owned by private creditors, and that's one reason for the additional complexity of debt restructuring, and that it's changing the creditors' landscape. According to the Secretary General of UNCTAD, Rebecca Crispin, the conference is to tackle everything from navigating debt geopolitics to exploring the debt climate nexus to enhancing governance and transparency. The meeting will also examine legal tools for consensus building, innovative debt instruments, and institutional capacity challenges. We hope to get more conversations from that debt conference, which ends on Wednesday. We'll try and get one of the executives on the program before then or even after then. Now, back here in Nigeria, as part of efforts to expand the derivatives company market and enhance liquidity, the Nigerian Exchange Limited has listed 2 new futures contracts, and these are the NGX 30U5 and the NGX Pensioners. Then, in a statement issued on its website, the NGX explained that the newly listed contracts are tied to the NGX 30 index and the NGX Pension Index. The exchange explains that the NGX 30U5 contract was listed at 4,226.75 points, while the NGX Pensions contract debuted at 5,079.75 points, with an expiration date set for September 19th of this year. According to the NGX, the global derivatives market is poised for significant growth, projected to reach $39.17 billion by 2027, and that'll be up from $21.98 billion recorded in 2020, with an 8.6% compound annual growth rate. Well, yesterday we did get that inflation number for the month of February, as is recorded its second drop in February. An economic expert and chief executive officer of financial derivatives company, Mr. Bismarck Rani, has listed some of the factors that could sustain the decline and signal a chance for possible interest rate cuts by the CBN at their next meeting. He was speaking earlier today on Business Morning, and he points out that poor road network, high petrol and diesel prices are some of the structural challenges that need to be tackled in order to further bring down the country's inflation.
So if you want to deal with aggregate factors, that's okay. Now let's get the diesel down to 1,000. It affects the cost of calls in base stations, it affects the cost of transportation, it affects the cost of using your generators and all of that. That's more structural. When we see that begin to happen, then we now know that, yes, this is happening. Another factor we've seen is wage restraint. That is, people are not buying because they don't have the money to buy. That's pretty fundamental. So one, either they increase their productivity to ask for more wages, or to cut back on their consumption. All of those have an effect. But again, it's interesting that we've seen inflation go in one direction for such a long time. The fact that we could see a point of inflection and take a breather means that everybody has to take a look at it. And the government of federal government of Nigeria, state governments have to now look at their spending, the money supply growth, the leakages in the system, and to some extent some profligacy. We need to bring all of these things together, and we'll see that this trend can be sustained. If not, if it turns around, it could turn around with a vengeance. But one thing you must notice that there's a correlation between this and the exchange rate.
That was Mr. Bismarck Romani. Also on Business Morning today, Laddie Williams had a conversation with the Managing Director and Chief Executive Officer of the Central Securities Clearing System PLC, Mr. Haruna Jallo Waziri. And the focus of one of the conversations there was on the $1 trillion economy, which is the target of President Bola Tinubu, and the role that the capital market could play to achieve it.
For Nigeria, to be honest, like I said earlier on, what is very important is for us internally to continue those reforms and continue them in in a disciplined way. And more importantly, as we begin to, do expenditure, the right expenditures are important. We should be very disciplined about revenues when they come in, than to, especially if oil prices go up, which we don't think will in the near future because of the trade wars that are going on. But I'm hopeful again, like I said, and it's about being disciplined and watching our expenditure and putting it in the right places. But I think the grey economy from that perspective has always been significant. We've always had a grey economy in Nigeria, and I remember when MTN came to Nigeria, there was another South African company, other Vodacom, that wanted to come and buy a license for GSM, and they took a look at our numbers and said that no Nigerian can afford more than 3,000 naira a month, or up to 3,000 naira a month for airtime, and the rest stayed. And their numbers were wrong, because we have a grey economy that supports the system, which is not being counted. I suspect that's one of them. If you go to Lekki and see the number of buildings that are coming out and the people that are buying the property, they're not normal people that are part of what we count in our GDP, and that exists. So it's a resilient economy, if you ask.
All right, now one news that's going around now is the expectations or the beginning of polypropylene production in Nigeria, and that's as a result of the Dangote refinery. The manufacturers seem excited about this, and they say they do have some expectations from this polypropylene production and what could come out of it, or what could serve even as a raw materials or finished materials from it. So we have the Director General of Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadri. Mr. Kadri, good afternoon and welcome to the program.
Good afternoon, and thank you for having me.
Great. So this production, they said it to be officially unveiled soon, but production has started, and I believe there's a great number of production that's expected from it. What are the manufacturers expecting from this polypropylene production?
Well, okay, so I think it's cheering to see again that the Dangote Group has made yet another major contribution to the Nigerian economy by the establishment of the refinery. Apart from the 650,000 liters of petrol that is being produced every day, we now have a situation where we have nearly 900,000 tons of polypropylene being produced locally annually. Before now, about 90% of our needs are imported into the country, to the extent that Nigeria ranks 28 or so in the world's demand for polypropylene. And polypropylene constitutes about stands at the 18th position in items that are imported into the country. So for us in the manufacturing sector, it is a welcome development. It actually more than provides for the 250,000 metric tons that is our national demand, which has been grossly non-available in the country. So you can imagine what this is going to do to the sectors that will be impacted: the textile industry, the plastic industry, the furniture industry. So we are going to be saved amounts that are in excess of $267 million. And we are talking about the scarcity and inadequacy of dollar that we spend every year to import this material. So for us in the manufacturing sector, is yet another welcome development. And going forward, we will be able to incentivize investment, more investment in that sector.
Mr. Kadri, I have to tell you that I am personally interested in the textile, because we know what the textile industry has done to this country in the past, and yet we seem to have lost that glory. I notice, of course, you are one very loyal local textile customer. So do we see this like feeding maybe a backward integration, forward integration, whatever way it could come, to resurrect or bring more activity to the textile industry in the country?
Yes, very much so. Incidentally, in my earlier days in Man, I served in Kaduna, where I covered 7 states and Abuja. And we used to have 7 textile industries. They were employing more than 2,000, more than 200, more than 25,000 workers, aged between 18 and 40 years or 40 years. So all of this has collapsed. And we have seen the global trend of the textile industry relying on the petrochemical industry. So you can imagine what kind of boost this is going to bring to the sector. And that it is now available locally and does not require that we continue to look for foreign exchange to be able to meet our demands. It is actually a cherry news. And you will imagine that the sector has witnessed a lot of flight in terms of companies closing down and investors not wanting to come into the sector. So now there's a golden opportunity of availability. And if we are to follow the trend we have seen in Dangote coming into the market and ensuring that we have a lowering of prices, it has been demonstrated in the petroleum sector, so in the supply of PMS. So we should also see this as creating competition in the domestic environment, which should see to the lowering of the cost in that sector. So we are seeing this as an addition to building a competitive textile industry and, of course, by extension, the garment industry in Nigeria. I believe that what we should then be looking forward to is government's deliberate efforts to incentivize more investment in that sector and looking for support that will allow that we patronize what is made in Nigeria. We are able to earn the respect for patronage of made in Nigerian products in terms of price and quality of delivery.
And I hope we won't see any challenge. When we heard that Dangote refinery was coming, 650,000 barrels capacity, we thought, okay, we're going to have sufficiency. But we know the many dramas that has come since the initiation of that refinery. So just as you have said, perhaps we should just stay optimistic that with this now, you said we're going to save about $657,000 that would have been used to import some of this raw material. So we hope that there'll be no hitches along the road.
Yes, that's a very, very important statement. If the economy is going to be saved $267 million of imports at a time that the present government is trying to create a $1 trillion economy, where we have seen the scarcity and inadequacy of supply and high cost of inputs due to the unfavorable exchange rate that we have. So this is huge saving. And what we have always said is that when we see champions like this that are blazing the trail and having sufficiency to the extent that we can even export, and any foreign exchange that comes in to fund our inadequacy is worthy of support. And we are very hopeful because even the NLPC has a capacity for 13,000 of polypropylene. You add this to what Indorama has and the huge supply that we are going to have from the Dangote industry. Effectively, we have become a net exporter of polypropylene. And it means that all our imports from Saudi Arabia, South Africa, South Korea, China, and India is completely gone. We can now settle for self-sufficiency and even export to earn foreign exchange. So I believe we are not going to have challenges and that we will consider the positive impact, not only on Dangote as an investment, but on the economy in terms of job creation, in terms of payment of tax to government, in terms of incentivizing investment in that sector, and ensuring that we have more contribution to the GDP from the manufacturing sector, which has, in a worrisome manner, contributed less than 10-11% over the years.
All right, Mr. Kadri, we certainly do hope for the best with this, beyond the news and the cutting of tapes. Director General, Manufacturers Association of Nigeria, Mr. Segun Ajayi Kadri, thank you for the time.
It's always a pleasure to be with you. Thank you.
All right, so while we talk about something that's related to that, because if we want to talk about manufacturing or the real sector, then we obviously have to talk about power. That's what we're going to talk about next, but that will be for our viewers on our other platforms apart from the DSTV. For our DSTV viewers, we hand you to Anambra State there, where there's the commissioning of the Solution Hospital Oroko project. Solution General Hospital Oroko project. That's happening in Anambra State. As we know, Governor Soludo is celebrating 3 years in office and is doing it with this project. So that's for our DSTV viewers. For our other viewers, please do stay with us. If you're watching on YouTube and you want to continue with Business Incorporated, just switch to the next window and you'll be with us right here. And so to continue that conversation on activities in the real sector, let's talk about energy now with a Global Energy Alliance for People and Planet. And you can expect that it's going to be a conversation that's related to clean energy. That's what is going to be on. We have from our Abuja studio now the Fauzia Okediji. She is the Manager Utility Innovation with Global Energy Alliance for People and Planet. Fauzia, good afternoon and welcome to the program.
Good afternoon. Thank you for having me.
All right. So, we're talking about real sector, and we know that energy is a major one, but it does seem at this time where renewable energy obviously is in focus, even, in spite of what that's happening, they're supposed to discourage that. But when you talk about renewable energy in Nigeria, it seems you shouldn't talk about it in the commercial quantity or in the commercial usage because of the cost. Is there anything that's being done to reduce that cost and make it more accessible to the real sector?
Thank you for that question. So I'll start by talking about the current context. We know that 90 million people do not have access to electricity, and it's also been established that our average supply from the grid daily is about 4 to 5 gigawatts. But also reports have shown that we have usage of diesel and petrol gensets that amounts to about 60 gigawatts. So it's 12 times the size and the capacity of what we're getting from the grid. So there's a significant energy access gap that is existing. But also importantly, a large portion of the population that do not have reliable electricity. So the conversation is around how do we fill this gap and address the reliability issues, even for those that are connected to the grid. And what we are currently looking at is distributed renewable energy. Now, when we talk about costs, we see this model and this solution as a cost-effective approach to closing that access gap. And what do DREs mean, as it's usually known, is basically supply and demand in the same location. So it eliminates the need for extensive transmission grids. So already that allows the cost to be lowered as compared to larger scale grid-connected solutions. So what we're now looking at is, or rather what we should be thinking around is, how do we leverage these natural resources, that's renewable energy? How do we also leverage the global momentum with falling prices of these technologies, because solar PV panels and batteries have been declining in terms of price? And then importantly, how do we also leverage diverse expertise and partnerships to be able to address this interwoven challenge around energy security and reliability? And that's where we have, as the Global Energy Alliance for People and Planet, been piloting these DRE models. We've seen them to be modular in nature, and that makes them flexible. So it allows for that ease of installation. It allows for that quick deployment. Secondly, it's also applicable to remote areas as well as grid-connected areas. And what we're seeing is that those deployed and those deployed within utility areas, that's the interconnected mini-grids, is proving to be a compelling opportunity to reduce the costs of energy for consumers. It's also helping to reduce reliance on the grid, and also importantly, reduce reliance on diesel and petrol gensets. So this is a model that in the past 3 years we have been piloting, and very recently an IMG project that is called Interconnected Mini-Grid Project was commissioned two weeks ago. And that's where you have the DRE solution, distributed renewable solution, basically augmenting power from the grid. And that essentially means solar PV panels and batteries integrated in utility networks. And we have this example in Ogun State that was commissioned 2 weeks ago. And that's a 1 megawatt interconnected mini-grid that's providing reliable supply to over 5,000 residents and businesses in that location. And it's a result, I'll probably just add that it's a result of very creative partnerships. So it was developed by the private sector, that's Darwin Coast, in partnership with the local utility, Ikeja Electric. And this is the first of its kind in Ikeja Electric jurisdiction, and as well as with the community, and supported by GIAP with our partners, Olon and RMI. So I would say that when we think about the cost aspect, this is proving to be a cost-effective solution that can change the game for improving reliable supply in Nigeria.
Yeah, well, it sounds interesting, I have to tell you, Fausia. And, well, I do hope it will spread, especially because, cost has been a discouraging factor for adoption of renewable sources of energy. But this is a conversation that we'll have to continue on another time. Managing Utility Innovation, Fausia Okediji, joining us there from Global Energy Alliance for People and Planet. Thank you so much for your time.
Thank you very much for having me.
All right, now let's take a break. When we come back, we'll head to the markets with Anita Edits. To stay with us. Welcome back. Still watching Business Incorporated right here on Channel Television. Let's head to the market to see intraday numbers with Anita Edits. Anita, you have a bit of good news today.
Yes, well, I would call it maybe like a dead cat bounce, which means in market terminology that it's not something that can really count on that this is a recovery, because we've seen the market being in the red for quite some times. Even yesterday closing in the red was down by about 0.15%, with about 7.8 billion naira loss. But intraday, as you can see here, is 0.04%, and this is just about 1 hour ago. So there could be a difference in between what I last tracked and what we will be expecting before the close of the market.
We'll see.
Okay. So now let's talk deeper about the markets around Africa, and always starting from the home front, Nigerian Stock Exchange All-Share Index, still within the 105,000 points, which it had lost since on Friday, and no reprieve at the moment. It's just a brief. The NSC All-Share, the NGX All-Share Index is just struggling for a rebound after closing, no thanks to the impact of profit taking, which has brought the market's year-to-date performance down to about 2.79%, and month-to-date in the negative 1.9%. 34 losers and 18 gainers just yesterday. But at the moment, we don't know how that is affecting the market, but we'll have our analysts to talk more about that just as the analysis progresses. For the Johannesburg Stock Exchange All-Share Index, 1.10% increase at intraday, and almost closing in on the 90,000 index level for that South Africa's stock market, 89,494.94. The fours have it right there for that number in numerology. Let's talk about the other markets within the African continent, EGX 30 and the Nairobi Stock Exchange. So it's mostly a green day intraday for 3 markets out of 4 that we track, and then a positive close for Monday for the Nairobi Stock Exchange All-Share Index, 0.63% in the green. So that's a snapshot for the markets, intraday market numbers on the African continent. Now let's talk more about Nigeria's stock market. So far, the month of March is just marching into the negative territory, which I just mentioned, about 1.9% month to date. Not too good. But let's talk deeper about the market, and we have Abiodun Adedotun, equity trader with FBN Securities Brokers, which is formerly FBN Quest, to tell us more about this market and other issues within the market. Thank you for joining us, Abiodun.
Thank you very much, Victor. It's good to be here.
Okay, so now you are the trader there. Now, can you tell us why have we seen so much of a downturn in the market so far in the month, almost 2% down? What are the attributes to this downturn on the markets?
Okay, yeah, the downturn we've seen in the market is basically risk off. We've seen a bit of sell-offs by international investors. You know, given what's been happening in the global landscape, what's happening in the US, what's happening in US markets and other global markets, it's partly affecting what's happening in Nigeria. Of course, we've also seen a bit of profit taking by locals. You know, in 2024, we had a bit of recapitalization from the bank, and these shares are being listed now. So investors taking profits made from that period till date. So pretty much that's what we've seen.
Okay, so now let's talk a little bit about the sector. Yes, most of the sectors have been in the profit-taking territory, downward territory. But interestingly, the insurance sector of the NGX has been on the upswing. So tell us what's driving this optimism or the sentiment in that sector?
Of course, investors are excited about the prospects of recapitalization that's going to happen in the insurance sector, right? Of course, Nikon has given a bit of guidance on what would happen in that space, and it's an opportunity for capital to come into that area. So one thing you would also note is that the insurance companies that have been pretty much undervalued for a very long time. So it's about time for them to get somewhere close to where their revaluation should be.
Okay, so now we're talking about a revaluation. We're also talking about a portfolio rebalancing, and all that will happen or have an effect on the intraday market numbers. Now, tell us how the market is moving at intraday from the last track that we had, which was positive.
I think I missed that bit. Please, can you come back?
Okay,
sorry.
I said the market is all about portfolio rebalancing and so many other factors. Now, can you tell us how the market is moving at intraday?
Okay, intraday. The market is very, very quiet intraday today. Investors are still on the sidelines. Most of us are still waiting for the audited numbers of some of these listed companies, especially the banks. So not so much is happening. Everybody is just trying to sit on the sidelines and looking at how things progress before pulling the trigger.
Okay, so a final one, just in 20 seconds. What is your expectation for the market's close for the close of Tuesday's trading session?
I expect the market to close about flat.
Flattish close. Okay, so we'll keep our eyes out on that, and we just hope that this market will be able to make a rebound as we count down to the end of March. Thank you so much, Abiodun Adedotun, equity trader with First Securities Brokers, giving us details about the Nigerian stock market intraday market numbers. Okay, from Africa to the Middle East, that's where our flight takes us to, and we see that major indexes there, they are mostly, it's kind of like a mixed picture there. It's coming in the midst of uncertainties within the Middle East. Oil prices are down, and this is coming as amidst the ceasefire talks, which has offset the instability in the Middle East. And there's also fears that could also have an effect on the demand of oil. It's also coming at the same time where the global growth concerns and the U.S. tariff, as well as U.S.-Russia-Ukraine ceasefire talks, which is happening at the moment as we speak. So that concern is also having its toll within the oil market, as well as the Middle East stability, Middle East concerns. So that's why we see a mixed picture there for the Dubai and the Abu Dhabi, both on the United Arab Emirates. But let's take a look at how the Saudi Arabia is in the red at intraday 0.47%. That's for the Tadawul 11,827.19. And for the Qatari Stock Exchange, yesterday at intraday, we saw that market in the red, but intraday today is kind of like a smiley color there, 0.34% in the green at intraday, 10,438.84 for that market. Now, from Middle East, we fly over to the United States, where we see the markets there, stock futures are edging lower, and this is because investors are actually focusing their attention on the U.S. Fed's meeting, which kicks off today. That's the second meeting under U.S. President Donald Trump, where there's a 99% likelihood, according to economists' projection, that the U.S. Fed, the world's biggest economy, the world's #1 central bank, would keep the interest rates unchanged. So markets are keeping eyes out on that. But at the same time, the market is also monitoring economic data, which is expected to be released before the policy announcement, which will be made on Wednesday. But for Tuesday, the market is actually expecting from the U.S. the report economic data on imports, housing, building, and production, which will be due out from the world's biggest economy Tuesday morning. So that's just about some 7 hours behind us here in Nigeria. So at the moment, there's no earnings report, but so far, this is how the market is coming in futures. But on Monday, the markets were in the red, trying to make a rebound for what it saw last week. So that's it for the markets on the US front. Now, finally, for the markets in Asia, you can see the greens have it there. The greens have it because it was led by Hong Kong's the tech stocks there. They made the market to be in the rally. So Hang Seng Index was a major gainer there, 2.46%. And we have some stocks such as Beidou, Alibaba Group, as well as Tencent, and some other stocks which are from China but listed on the Hang Seng, which is Hong Kong's financial market. So that's why all the markets here were in the green. And at the same time, talk about the Nikkei. We hear that the Bank of Japan, which is Japan's central bank, is also holding its own central bank policy meeting, which is coinciding with the U.S. policy meeting, monetary policy meeting. They're also expected to keep their rates unchanged at about 0.5% when the meeting concludes on Wednesday. So it's about a 2-day policy meeting for both US and Japan. And then also this week, we also expect that there will be a central bank meeting from the Bank of England, as well as some Scandinavian banks, the Bank of Sweden, as well as some other banks. So it's more like a central bank meeting week for major economies around the world, or some of the major economies around the world. So this is just for the 3 out of the 5 markets that we cover on the Asian continent. So green colors here. Now let's take a look at how Shanghai and the Nifty 50, it added about 1.20% to its earlier close, and then through closing Tuesday's trading session up 1.45%, 22,834.30, and then for the Shanghai is up by 0.11%, 3,429.76 for the close of Tuesday's trading session. So the greens have it for a second day for markets across the Asian continent, and of course we continue to keep our eyes out on how the Trump's trade tariff takes effect on most of the global economies. Now it's turned to a global trade war, not just a trade war between the US, Shanghai, China, and Canada and Mexico. It's now turning into more like a global trade war. So we keep our eyes out on how that will shape other markets, including some markets within the African continent, which are heavily dependent on imports. So that's a close for the markets for Tuesday in Asia and for intraday market numbers.
Thank you so much, Anita.
Pleasure.
All right, now let's see what's happening in other parts of Africa. Now we start from Egypt, where the President Abdel Fattah al-Sisi says that the monthly losses of the Suez Canal revenues reached around $800 million, and that's because of regional situation as Yemen's Houthis have been attacking vessels in the Red Sea. The Iran-backed Houthis have attacked vessels in the Red Sea area since November 2023 in support of Palestinians in Gaza during Israel's war on the enclave, disrupting global shipping by forcing vessels to avoid the nearby Suez Canal and reroute trade around Africa, and that has increased shipping costs. The Egyptian presidency's statement did not directly refer to the Houthis, but Sisi said in December that the disruption $1 billion in less revenue from the Suez Canal last year, 2024. We're still in Egypt now. The world's largest Muslim majority country, Indonesia, is mainly importing its dates, which is a staple Ramadan fruit, from Egypt and Saudi Arabia. And this is according to Central Statistics Agency. Almost 3 weeks have passed since the Ramadan began in Indonesia and the rest of the world, and the chewy sweet dates have become a staple in iftar, or the meals that people have in the evening or to break their fast. Official data shows that Indonesia's imports of dates had skyrocketed ahead of the Ramadan, and the Southeast Asian country tried to meet its growing demand. BPS reports that Indonesia date imports reached 32,890 tons. That's worth nearly $38.8 million in the first 2 months of 2025. We're still in Egypt now. That country has allocated 30 billion Egyptian pounds to provide for financial facilities for private sector companies under an initiative launched by the Ministry of Industry and Ministry of Finance to support priority industrial sectors. Participating companies will benefit from a subsidized interest rate of 15% funded by the State Treasury for 5 years, starting from February 2025. And this is according to a statement from the cabinet. The initiative aims to assist companies in 7 key industries, such as the pharmaceuticals, engineering, food, chemical, ready-made garments and textiles, mining, as well as building materials, by offering funding for purchasing machinery, equipment, and production lines. And now, connected to that Houthis fight, Sudan has banned all Kenyan imports, citing President William Ruto's interference in her local affairs. The ban came after Nairobi hosted the rebel Parliamentary Rapid Support Forces, which seeks to form a parallel government in Khartoum. And Kenya earned 215.21 billion Kenyan shilling from tea last year, with exports accounting for about 181 billion shillings. According to Kenya Tea Board, Sudan is one of the top 5 markets for Mombasa-based tea auction, and the East African Tea Trade Association has expressed concerns over the ban. According to the tea sellers, the embargo was implemented during the holy month of Ramadan, when Sudan's tea consumption is normally at its peak. And then the Zimbabwe Mining and Smelting Company has been placed under corporate rescue after businessman Shepherd Tunida filed papers claiming that the company owes over $77 million to the creditors. Well, Tunde claims that Zimasco failed to honor a 2017 agreement with his company AVM to source coke peas from South Mining in Hungary. Zimasco corporate rescue comes as the company seeks to expand with plans for new furnaces and a 100-megawatt solar plant in Kweke. It commissioned a new furnace in December 2023 and plans to redevelop its mining assets on the Great Dyke. Despite producing 70,000 tons of ferrochrome annually, Zimasco has faced furnace shutdowns due to volatile ferrochrome prices and high power costs. Now let's talk about rubber now, with what's going on globally. And we see those backward integration efforts in Nigeria and around the world. Rubber is a key export commodity for Nigeria, and is used, I mean, for a whole lot of things. Your tire, your roofing, a lot of manufacturing is done around it. Let's get some insights on rubber this time with Miriam Ode, an analyst with Financial Derivatives Company. Hi, Miriam. You're welcome to the program.
Good afternoon, Edie. Thank you for having me.
So we have some forecasts. Seems a lot of interest around rubber at this time. What's driving this interest and what's driving the forecast?
Yes, the EIU, that's the Economic Intelligence Unit, is forecasting a decline in the global price of rubber by the end of 2025. And even presently, we're seeing rubber prices in the global market decline by about 1.3%. And why we're seeing that's year to date, and why we're seeing this decline and why the EIU is forecasting a further decline in the price of rubber is because of factors such as increased supply from producers like Thailand, and the EIU is forecasting production in Thailand to increase by 3%. And also other factors like the stronger US dollar and also lower oil prices. To give more context to this, there are two types of rubber. There's the synthetic rubber and the natural rubber. And natural rubber is gotten from latex, while the synthetic rubber is gotten from petrochemical sources like oil. So this means that oil is directly linked into the production of synthetic rubber, meaning that a decline in the price of oil, which we're currently seeing, would translate into lower cost of production for synthetic rubber. And now synthetic rubber and natural rubbers are substitutes, meaning that synthetic rubbers could be used instead of natural rubber and vice versa. And so if synthetic rubber becomes cheaper to use, we expect to see demand shift towards synthetic rubber, which will reduce the demand for natural rubber and in turn its price, which is what we are seeing play out. But every projection or every outlook has its risks. And one of the risks to this forecast is actually the extreme weather conditions in the Southeast Asia region. And what this does is that it could reduce output levels in the region and cause and place an upward pressure on rubber prices in the near term.
Yeah, that's scary when you say rubber crisis. Isn't there a way? We know that Ivory Coast is a major producer of rubber. Nigeria too has the potential as usual. Isn't there a way this crisis can be avoided? You know, maybe boosting of production in the short term, maybe?
Yes, we know that under normal circumstances, if prices increase, then producers will be more willing to increase their production of the commodity. And last year, which was in 2024, we saw rubber prices increase to a 13-year high. But we're not seeing an increase in the level of production. We're not seeing a significant increase in the level of production of rubber. And this is because rubber prices have remained relatively low for the past decade. So this increase in the past 1 year is not enough to offset the decline in rubber production for the remaining 9 years. And what we're seeing is that producers are not incentivized to increase output. And what we're seeing is that they are switching towards other profitable commodities like palm. In Thailand, in Ivory Coast. Ivory Coast, what we're actually seeing in Ivory Coast is the opposite of what is happening in the global trend, and that's a switch to rubber instead of out of rubber. And this is because cocoa production, which we know Ivory Coast produces, is one of the world's top producers of cocoa. What we're seeing is since cocoa prices have become relatively volatile in this period. I mean, it reached about $11,000 per MMT, and now we're seeing it at about 8,000. So this has discouraged producers from producing cocoa and have now switched to increase their production of rubber, which is what is currently slightly weighing on rubber prices. And since producers are not willing to produce more, prices are likely to remain low during this period.
All right, Miriam, thank you so much for that.
Thank you for having me.
Let's head now to, well, the NGX studio where Ladi is putting another market on another market. This is the NGX and is talking about crypto. Ladi, I think you'll be fined for this.
Yeah, we're back here. We're still here, and we're still tracking most of the markets at this time. We're just going to get right into it, see what's playing out in the crypto market. We're still seeing Bitcoin ranging at this time with major cryptocurrencies tracking the movement of Bitcoin. But I'm just going to go straight into it now with Rume Ofi. Rume, it's great to have you. We're back here on the trading floor.
Exactly.
And definitely we're feeling the energy with trades going on. But the crypto market, not looking as good. You know, Bitcoin, when you're looking at what's happening with gold at this time, you know, hitting a new high. But Bitcoin is going the other way. I guess it was a no-brainer. Trump gets into office, sell the news.
Yes, I think a lot of people actually have consumed the opportunities that the Trump mania ideology actually brought in. They made a couple of money, so now it's to cash out. Because the truth is, if you don't, you lose a lot of money in the process. But you know, Trump is usually at the first time when it comes to office, in the period of time, you usually see downsides. Then maybe later we see something good. But we're expecting to see the very best. But for now, we'll still breathe underwater.
And talking about, you know, breathing underwater at this point, let's look at currency now. Let's look at the Naira. We've seen a lot of stability with the Naira. The CBN governor did say since 2024, around June, the Naira has been stable. And remember that whole drama with the P2P market and how that was supposed to be impacting you know, our currency. But it's been stable, and the P2P market still exists. At this point, how are you seeing the?
You know, so the truth is that is a clear case of throwing the baby away with the bathwater, and we've been advocating for a very long time that regulate this industry in a way that makes sense so that we can all benefit. South Africa is in fantastic way. I think they approved about 50 plus exchange platforms. Ghana is about doing something very spectacular. Kenya is doing very well. In fact, VCs are going to build a lot of companies, blockchain and crypto companies in Kenya, where we're here. So it only suggests that it is not crypto that is our problem. It suggests clearly, but you know the downside of it is when you don't regulate or give access, because a couple of these exchange platforms in Nigeria still have issues with trying to reach out. If you log on to their site, it's not accessible. We're seeing the EFCC saying crypto is this. The agents of government, they always make crypto look bad. And these are things that people are doing in the other parts of the world. The US is putting framework on stablecoin or crypto, but they are making us look. But
we're seeing the agencies in Nigeria, they're doing everything to protect us.
Yeah, no, sure. But
at this point. But are we protected?
Yes. So we being protected is another situation entirely.
Right.
You know, so in process of making crypto look bad, you're making it appear somehow different. Now, one client, these things can be managed. If you don't give exchange platform the opportunity to be able to do business and regulate them, like the SEC is already doing right now, fantastic job. If you don't make it worthwhile, people are going to use the back door, which is the P2P. And using the back door.
So what's the solution now? Because the P2P market still exists.
Yes.
People are still trading there.
Sure.
Even though it's also very risky.
Yeah.
Because you could lose your money in the P2P market. What's the solution?
I think the solution is giving access to exchange platform, encouraging licensing process for other platforms. There are a lot of platforms that want to come to Nigeria, for crying out loud. The Kakens of this world, the Coinbase of this world. Binance is no longer in Nigeria. You can imagine, you know, KuCoin and all that. Make them come. Let them come. You give them our terms and conditions. Luno and the likes, you know, so give them their terms, our terms and conditions as regards to our jurisdiction, and we do business. Our young ones are so enthusiastic to get into this crypto industry because the industry is an emerging tech. You know, so it will help all of this. Unemployment in Nigeria is difficult, blah, blah, blah. No, come to tech. There's opportunity there. Make it open. On the flip side, if you don't, people are going to do money laundering.
Is it just about trading and making 100x, 200x? Is that what it's about?
No, it's beyond that. In fact, there's a whole career. What we are doing here, what I'm doing is a sphere of crypto. Analyzing crypto is a job, it's a full-time job. It's done in different parts of the world. There are community managers in different platforms, because each of these platforms crypto is based on community. People need to manage all of that. We have people that are designers, like graphic designer, UI UX designer in the crypto space, and so many, even public speakers, even comedians, crypto comedians. You've not heard of that,
right? That's
you know. So there's
maybe when you're losing money, they make you laugh.
They make you laugh with crypto terms.
That's quite interesting. Well, I guess there's so much to look out for, you know, in 2025 for this industry in Nigeria. It's still, you know, evolving. We'll see how the regulation goes.
Yeah, the regulation needs to come fast, because if we don't do this, bad actors will be using the back door to launder money, terrorism financing, kidnapping, because the fact that we've not done what is important, these issues are on the front burner. But in the other climes, they put all of this at the other side because they are working on the main stuff that makes sense. The the Senate is doing a couple of things and all of that, so to manage stable coins, and we are also doing a few things, but it can be better. So we hope for the best in 2025.
Hope for the best. Thank you so much, Romeo Fee.
Exactly.
Always right here.
Live and direct.
At the trading floor. All right, so that's it for the crypto segment right now. Hand things over to Ini.
Yeah, thank you, Ladi. I see he's almost reluctant to let go, but don't worry, Ladi, you can continue that tomorrow. Well, thank you so much for being a part of Business Incorporated again today. We really appreciate your time and your views that you spend with us. Let's meet again tomorrow, but you can always watch our program on YouTube, Business Morning, Business Incorporated. Go to channels, web on YouTube, and then you can see it. I'll see you tomorrow. I'm Ini John Mekwa. Bye-bye.